This is Where's the Money, episode number 13, Facebook post-IPO.
You're asking me, where's the money? Where's the money? I mean, I don't know where the money is. I've never been good with figures, you know that. I don't know anything about math. It was never my good subject. I don't know where the money is.
Pay me my money down. You wanna make a little easy money tonight? I'm looking for easy money.
Douglas Soltis, episode number 13, Where's the Money?
Where is the money, Rob?
It's locked up into Zuck's pocket right now, that's for sure. The newest billionaire.
Well, is he still? Wait, he's lost a bit of that coin recently, and it's not just because he's on his honeymoon.
Aha, yes. What a prenup that would be, if you ask me, isn't it? This has been such a week, and you know, we want to talk about the post-IPO frenzy that's going around on Facebook, but really we want to bring it down and distill it to the fact that, listen, can these guys make money? And that's what the whole market is looking at. It's such a volatile market for Facebook these days, but can they make money? And that's what we're going to try to figure out here. I don't know if we're going to have the answer. Do you?
We're certainly going to rant.
Oh, this is
figuring out the roadmap for the next generation of mobile startups would be great, because I'm not sure this is the one that they want to follow.
Well, it's a yeah. I think this is a cautionary tale, but it's also one of patience. You know, when you go public, this isn't the .com era, right? This is a long-term view, a long view on the potential of the company. This isn't like a 24-hour. Right now, we're 7 days into it. This isn't a week-long journey. An IPO is a long process. At least it used to be.
Jesus, has it only been 7 days?
Yeah, I think it's been a little bit longer than that, but come on. I mean, it has not been long enough to validate or vindicate or vilify, wow, Facebook, right? It just hasn't. So, but what we're looking at here is that, what does this mean? They got $16 billion in the coffer right now. They priced at $38, and what does that mean for their revenue model around mobile? Because that's where the big challenge is. That's where the criticism is, internally and externally. But Doug, before we do that, I have to do this, because this is something that's very important. Are you ready for it?
Yeah, I'm ready.
Untethered Talks, buddy. Untethered Talks. We are about 4 weeks away from Untethered Talks, and the question is, why haven't you registered yet? You, the listener, why haven't you registered?
Why haven't I registered yet?
Douglas, exactly. Well, it's because the stipend you provided you need as a speaker. I'm going to have to talk to you about that. We have some of the best speakers in the land. That's this North American land. Coming to this thing. We have Tom Hearn, who's the CFO of Score Media, big television channel that's doing more things in mobile than you can imagine. We got Kunal Gupta, who is the CEO of Polar Mobile. We got Yasser Ansari, who is the founder of Project Noah. We got Damien Patton, who's the founder and the CEO of Banjo. We got Amber Mack, who is a best-selling author and a TV personality and a technology consultant. We got Doug Stevens, who knows everything. He's the world's only retail prophet. Worley, who is the mad scientist. Gary Schwartz, Sydney Eve Matrix. We got everybody coming to this thing. Why are you not there? Well, because that hasn't started yet. Why haven't you registered?
Because I think they've been overwhelmed with the speaker list, and I think once they realize that they can survive that 2 days and come out of it with their brains swelling with knowledge and ideas, I think they're gonna jump on it.
Well, I think that you're 100% right. This is going to be one of the penultimate mobile events. We're looking at this as a 2-day. There's 25 speakers. You are going to learn so much about your business. You're going to learn so much about mobile. You're going to understand where to go, chart it, all that kind of stuff, where the trends are happening, and then tactical pieces that you can take home. Just go to untetheredtalks.com, register. Do yourself a favor. Don't do me the favor. Do yourself the favor. All right. That's it. Commercial over for Untethered Talks. Untetheredtalks.com.
Good use of integrated marketing.
I think so.
Little postscript there. Reception is at the Steam Whistle Brewery.
Right. Yes.
So you can come for the mobile, stay for the beer.
And did we say that it's an open bar, by the way?
But when dealing with Untether, I think it's generally understood that we only roll with open bars.
Exactly. Show up. Untetheredtalks.com. All right, listen. I'm going to let Mary Meeker, who is at All Things D, the D10 conference, talk about. We're just going to get this whole thing over around the IPO. There's a whole bunch of questions around the IPO. Mary Meeker does a great job of enlightening and explaining this thing. She talks about the size of this IPO, the sheer size of this IPO. So I'm going to let it run for about a minute. This is an interview that they did, obviously, with at D10 with Walt Mossberg. So we might get this removed from YouTube, but it's worth it. I'm just going to flip over, and we are going to hear Mary Meeker talk about, this is her voice, about the Facebook IPO. Here it is.
I do not have any specific information on this, so I will opine on it based on what I've read in the media. And number one, Facebook shares were trading at a $104 billion valuation on second market. So they were trading at that valuation in a private market. When the IPO was the largest IPO in market cap in the history of probably the world, but the United States for sure, it had more trading volume on its first day of trading than any IPO in history. 45% higher, 42% higher than General Motors, the previous precedent. On its first day of trading, it traded as many shares as the average daily trading volume of the entire New York Stock Exchange and 1.5 times the trading volume of the NASDAQ. And so I bring all that up. This IPO was a financial share tsunami. And so it was just coming in, and NASDAQ was trying to process all this stuff. So to go back, I just wanted to give that for context. That's hard stuff. Have you ever been in a tsunami or a hurricane? You know, and I don't, those are environmental tragedies and human tragedies. This is different, but it still is a thing that is just a wall of something. And I think for Facebook, you ask about what would I have done. The stock, I think right now, is trading near the low end of the initial filing range. I'd call it $28, $29 a share. I'm not watching a Bloomberg monitor up here, but that's close to where it is. And that was the low end of the initial filing range. They priced it higher because they were looking, these people are very good at what they do. They're measuring minute by minute, what's the institutional demand? Where do they want to buy this? They're not just doing it in a black box. People are saying, I'm in at this price, I'll buy more at this price. So they're getting constant feedback. They raised the price, it traded up, and then people got shares, and NASDAQ had a trading issue because it was dealing with this financial tsunami. People owned shares, they didn't even know they had them. And so there was, I've heard 2 hours, I've heard more, a gap in information, and then the stock started to trade down. And confidence and momentum in markets is so important. So people didn't even know they had stuff. They got stuff. They knew they had the shares, and the stock was already lower. And they said, I'm out.
You know, that's, I don't know how to describe it any better than she did. So, you know, just as a summary, she talks about this massive, this massive event, which was the IPO, people not knowing that they had shares because of the institutional demand, finding out that they had shares a couple of hours later, watching the stank kind of decline and the momentum disappear, and then selling. And, you know, I think that that's a good summary. There's all these lawsuits flying around. We don't want to talk about that. All we know is that they priced themselves at $38. They didn't leave any money on the table. They have $16 billion in the bank. And now it's the market looking to see if Facebook can actually turn this into a win. Right now, I'd say confidence is fairly low, but that has a lot to do with the fact that in Mary Meeker's presentation, even at D10, Doug, she talks about the massive opportunity of mobile, and this is a mobile world. We're not there yet, but revenue is tied to mobile, and Facebook's success is going to be tied to the way that it turns revenue or mobile into revenue.
Yeah, and I don't want to dig too deep into this, but it's this Facebook IPO story is becoming an episode of the Brady Bunch, where my social streams are just Facebook, 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 and it's coming from both sides. It's sadly not only what Facebook is doing as a company and as a product and as a platform, but just they are a public company now. The speculation is more rampant than ever before, and it was pretty significant. So to see the conversation around speculation, like, oh, hey, mobile's going to be a really big problem for them, maybe more so than we thought. Really? You didn't they say, like, how far do you have to go into the fact that, you know, all of their subscriber usage is moving to mobile, and they don't make any money off of it. And then second, Mossberg, who in that interview earlier was talking about mobile and advertising, and he's talking about it in terms of screen real estate and ad content being served, which is exactly like, this is what happens when you make yourself a public company. You open yourself up to, like, prior to this, Mossberg could have just said that and it doesn't matter, and now it's going to affect your share price, which is very concerning. Because that's,
well,
mobile ads are not going to make Facebook any more money than their desktop ads.
Well, no, and that's the thing, is that the average, like, when you know how we feel about this, like, the future in revenue generation is not about eCPMs, is not about display advertisement on a mobile device. We got to get past this garbage, which is that we're just going to take what we did in the newspapers and magazines, and we're going to move that onto the web, and then we're going to take what we did with television and move that onto the web and combine it, the two, and then we're going to take all that and put it into a small screen or a tablet. Bullshit. Get over it. That is not the future. It's like, it's a $3 billion industry, I think, this year, and it's going to go up to maybe $15 billion. And people who want to play in that, it's not enough for Facebook to own that. They have to own the whole market, because their market cap at IPO was something like, what, 40 times revenue? So they have a lot of catching up to do if they're going to do this. And if you look at this, the stats are that that CPMs on the web are 5 times greater than mobile. So they went from a web world where they were making 5 times as much in a transition period where if you look at this chart that I'm just pulling up here, their year-over-year growth, they have 488 million mobile users. So that's half of their audience. So if you've gone from a full audience online, you've doubled your audience, but half of them are now mobile, and the mobile is 1/5 the revenue opportunity when it comes to eCPM. They've got to change the way that they're making money. It's just very clear. And ads are not it. It's just not it. And people who think that ads are the future of their revenue should just go and buy their stock and just stop talking, because that is not what we should be talking about. And Walmart.
No, they shouldn't go buy their stock. They should not buy stocks at all, because you don't understand the market, and you're going to be thoroughly disappointed, and you're gonna drive down their price. So
no, what I'm saying about that, Doug, is that the people who think that that's the future, that the future of what Facebook is building here is an ad-driven model for mobile, don't have the education, and they're just playing darts here. They're just go buy it because it's Facebook. Don't buy it because it's a good business investment. So, if you like the company, go buy the stock and be prepared to be disappointed if that's the way they think that they're going to generate revenue from it. But it's crazy, this conversation that's going on right now.
Okay, so there's one more point that I want to make on just the kind of the mobile and the ad stuff, and then I want to take this back to the startup level, because this show is really about how startups monetize, and can we see Facebook as a what lessons can for example, Damien Padden, who's coming to Untethered Talks, take from this as he grows out his mobile local social service, hopefully to riches and rewards. But so it's just the idea. I read a really great article by Steve Gilmore earlier this week or last week. I think it was over the weekend, following one of his Gilmore Gang conversations that you can find on TechCrunch. And it's the idea around this is, like, he's articulated this probably better than anyone else. And because we always say all the time that it's not mobile ads, but we never articulate what it actually is. And I think he's articulated perfectly the idea that mobile, the activity that will allow people to monetize mobile, is this push level agreement. It's the idea that the screen is so small, you're always looking to do an activity on mobile. You're not just surfing. It's this idea that you're going to be pushed, you're going to be offered a choice. Will I or will I not accept this product, service, company pushing me information and have it as a continuous stream? And will it be useful for me in my daily life? Whether that's information about things around me, whether it's a deal, with something. But it's not going to be an advertisement saying, hey, this option is for you. It's going to be, prior to that, accepting company X, service X. I am willing to let you put information right at the front of my very, very small 4-inch screen because I want that information. And it's a great article, and I really think that that's the way to go because you can't leave it up to like Facebook doesn't even make as much money as they would like to off their desktop advertisements. I've never clicked one in my entire life, but I do accept push notifications all the time for various services that are useful to me. So expanding upon that, I think.
You know what?
I think you hit it right on the head.
You know what happens with this is that yeah. So that's at you can go to TechCrunch or you can just do a Google search for push level agreement or a Bing search or a Yahoo search. We're not one dimension here in our search tools. We don't support any of them. We support all of them. But you know, this is a different mindset right now when it comes to this kind of marketing, because it isn't broad-based. It isn't advertising, right? It isn't like, you know, hoping that you reach a user. It is narrowcasting, and it is bringing the 9 buyers to the table, as opposed to going through the process of hitting 1 million people where 100,000 respond and 10,000 are interested and 1,000 look at them and 9 buy. You're going right directly, and it's a different mentality. It's not about awareness making, it's about sales, closing sales. And I think that that's where we should be focusing on mobile, is enabling the last piece to transaction. And I think that's where guys like Amazon get it, is that, you know what, there's all these rumors that they're going to be buying ad networks. It's not to get into the ad network business. That's small. Amazon is in the middle of a $5 trillion industry, and they want more of that. They don't want to generate $100 million in revenue from an ad network. No, they want more of the $4.7 trillion retail business.
Yeah, like, no, and even there, it's a perfect example, because it's not, hey, how do we make this work for mobile? That's not the question that's being asked. It's what is the mobile experience? Oh, it's highly personal, highly contextualized. You hold it in your hand. What would be the best way to offer a service for users? Yeah. Oh, providing them the information that they want when they want it without them having to ask for it, based upon the context of where they are in a personalized way. Oh yeah, that makes a shit ton of sense.
It does.
So, yeah.
Well, so you know, there's a few things that we should be just kind of cognizant of here. Is that when you talk about statistics, you know, mobile's ARPU has now surpassed the desktop ARPU simply because it's growing. It's just volume, and the actual mobile internet usage surpassed the desktop usage. I mean, we've started to see that trend, and growth is happening around the world in these things. So for Facebook, it really is about how they can distill this into a bottom line revenue. But I don't know that they're ever going to hit where their revenues need to be going down this path. But the other thing that we should talk about, Doug, is the way that they're buying companies. This mobile strategy that they have is just crazy, man.
Oh man, okay. Well, I think we should just probably leave it at, so there's a lot of speculation. We did, you know, obviously one of the things I've been covering a lot is Facebook's mobile strategy, or a lack thereof, or their mobile issues, right? So, it's highly interesting to me and very relevant to the industry. I haven't written on it recently, simply because with the launch of their Facebook camera application, I'm strongly reconsidering the idea. And partnered with the news that they're looking to maybe buy a web browser, which is kind of interesting, or build their own mobile OS, that they actually have no strategy. Because, you know, a strategy is a coherent, consistent implementation towards
something,
one clear objective.
Yep.
And it seems like they're just saying, we are going to do every single possible option and see what sticks and what grows, and just do it kind of in like a classic like hacker developer way. Let's just build it to scale. Let's do the screen of apps thing. Let's have a browser thing. Oh, we'll have our own OS as well, and we'll offer phones. We'll just get Facebook out in every possible way, which I think to a certain level makes sense, because people talk about Facebook applications, and you can't talk about Facebook applications. You have to talk about how the Facebook applications interact with Facebook as a platform, which is what it is. But for them to build a phone and a mobile OS, and like it's like, do you want to buy a phone with a very specific version of the internet on it. No, you want the phone that can do that and then do the rest of the internet. Which is why, you know, I never bought a Yahoo laptop, or why no one will buy Chromebooks. Because you want the whole experience. Beyond the fact that, you know, Facebook hasn't really proven that they can deliver great software or hardware. So look very soon for an article along the lines of reconsidering the fact that Facebook has a strategy at all. Because for Facebook to spend $1 billion just to say to Twitter, I drink your milkshake, you can't have
you can't
Instagram.
has that Instagram.
But by the way, because I didn't tell anyone we bought Instagram, and there's probably a lot of pissed off people here, and it's ready to be released anyways, we're going to release a competitive camera app to the app that we just spent $1 billion. Like that's not a strategy. That is a series of tactics which
Independent
in and of themselves might make sense, but as a whole, it's very confusing to users.
Well, you know, it is, and they buy these companies and they say that they're not acquires. Hires. They're leaving these companies as standalone entities, which I think is insane. Why would you build a house of brands like this? You're not GE, you're Facebook, right? You're not Johnson & Johnson, you're Facebook. Get the first thing that you're doing right. Get your stupid apps working properly there. It's a terrible user experience. Nail those. Get it so that people want to use this product. And figure out how to turn those into revenue. Doing too many things all at once just gives you that impression that there is no strategy, which is where we are. Facebook phone, browser, Opera obviously, and then all these other companies that they're buying. Maybe there is a cohesive strategy, but aim towards something. Look at what eBay is doing. Look what Amazon is doing. These guys understand this. eBay, their business is not drying up, but the actual core of their business, which was the aftermarkets, the bidding service. The core market, they realized as we're going to shift this up. So what did they do? Look what they bought. They bought PayPal, which is right in the middle of the mobile payments revolution. They bought 15 companies that are taking them in a direction. They've made a bet. They've decided. They've put their flag in and they are going towards that. They're running towards it. Same thing with Amazon. You know what Amazon's doing. It's protecting its turf. But every acquisition is along that strategy. So what I say to this, is that the end of my time?
Yeah, that's
rant over.
No, it's a good point for me to interject, because I really think that Facebook sees that they can be another Amazon with their mobile strategy.
Well,
the
then go
problem
buy
with that
Amazon.
is that, sorry,
go buy Amazon.
Go buy Amazon. The problem is that Amazon can provide a very specific retail service while opening themselves up to everything else. Facebook wants to be the only experience, which I think is not many people will buy into. And another fact, even Amazon themselves, they're making a lot of revenue off a small number of installed base. Facebook, everyone has a Facebook account. You can't service everyone that way. So it just seems like it's so left field. It's so left field.
It's very scattered. But we'd like to know what you guys think. What do you think? There's lots of conversation around this, and I don't want not so much about the focus on the IPO. That's a long-term thing. It's what they do between now and everybody's satisfaction with the IPO price or the stock price that is going to dictate this. What are they going to do in the mobile space? We all know that this is coming. We all know that the revenues are 1/5 and declining in the old way of doing business. They have to reinvent. Can Facebook turn what they're doing into Facebook company into an actual mobile company? There have been the tech scene is littered with companies that could not do that. They could not go from Web 1.0 to Web 2.0. And now can Facebook go from Web 2.0 into the mobile realm and maintain their dominance? Or we're going to be talking about a different company in 2 years from now, 3 years from now, when, as Mary Meeker points out in her massive presentation, that listen, as she says, Meeker predicts that mobile monetization levels in the U.S. could surpass those on the desktop within 1 to 3 years. Facebook's business is in jeopardy. Google's business is in jeopardy, their core businesses. But you see Google going towards something. Can Facebook? And that's the question. Is there money for Facebook and mobile?
Is there money for Facebook and mobile? And what can mobile startups today, or just all startups, learn from how Facebook has handled this? Just the idea that to be successful at all, do you have to be mobile first? Or have an integrated mobile strategy paired? And how do you obviously Facebook is extremely successful, but will that success sustain?
What do you think? Reach out. untether@gmail.com, at Tron on the Twittersphere, at Rob Woodbridge on the Twittersphere, or at Untether. Reach out and let us know. And guys, we'll see you guys in person at Untether Talks. Go to untethertalks.com. Douglas, see you for episode number 14.
Bye, Mrs. Woodbridge.
See you later, everybody.